Hey everyone. Sorry for the last minute change, but Ken is a little bit busy. He got caught up with something else, so I'm standing in for him. So my name is Jeremy Ju from Lydian Labs. We are a Web3 marketing agency. I've been in the space since 2017, so I've seen the ICO days, the IEO days, and then we have DeFi, NFTs. So now today I'm moderating Bridging NFTs and DeFi. Let's go through one round of introductions. Please, start from you.
All right. Hi everyone, I'm Kenny L with Elevate Ventures. I'm based in Bangkok and very happy to be here today. Good to meet everyone.
Fun place, eh?
Yeah.
Hey guys, my name is Vincent Xiang. I'm the partner of AC Capital. So I'm also based in Bangkok for now. We started investing in Web3 and crypto since 2020. Very glad to be here. Thanks.
Hi guys, Garlam Wan, partner at Momentum 6, and we basically invest into anything that makes money.
Hey guys, I'm Ken. I'm the head of research for Magnus Capital. I've been in the crypto space since 2014, mainly as a capital allocator. And with Magnus, we've been around since 2017. We're a multi-strategy blockchain fund and an early-stage VC. We invest in projects that we find promising, that we can scale in size. And we really want to believe in the teams that we invest in. Thanks for having us.
All right, so let's move to the first question. So regarding this topic, bridging NFTs and DeFi, right? So how do you think it will look like, or is it happening already, or do you think that it's still not that converging? What do you guys think? Let's start off with
Myself?
Yeah.
All right. Well, what do we see today with NFT and DeFi? We use NFTs as collaterals, right?
The lending portion,
the lending aspect.
Yeah.
Right.
But some people were front running the apes to mine that ape coin. I think you guys remember. They took out the ape, mine the ape coin, and then they put it back. What do you guys?
I find that very impressive. A lot of young people, they're able to come into this game amazingly smart. They find their hustle. I'm happy for them.
All right, cool. What about you, Vincent?
I think the utility of NFT and bridge adding to DeFi has already started. So back in the days when I first explored NFT, that was back in 2018. So when I was in Australia, so basically there were some pretty enthusiastic teams back then. So we started even writing the ERCs for NFTs. Some of them, like I say, for NFT rental, and so one of us even managed to use NFT for the World Cup 2018 ticketing. And that was quite a bit attempt back then. But now you see that for the very crypto native kind of infrastructure like UniV3, right? UniV3, you have a liquidity as an NFT, right? So that's basically how they have the active market making strategies in action, right? And on the other side, we also have a lot of NFT files, as you mentioned, right? Using NFTs as a collateral, or basically you can use the token assets or stablecoin token assets as a collateral to borrow the NFTs. So I think the very basic kind of NFT-fi idea has already been established, right? I think that there's still quite a lot of potentials to explore.
All right, cool. Please do. Yep. Go ahead. Let's do.
We actually lost money every time we touched NFTs, so
okay.
I don't know if I can speak to this one. I'll hand it over to Ken.
Well, you guys have experience then,
No, go ahead.
So the question was what do we see in DeFi and NFTs, and what's the correlation? So I think there's a lot of use cases that we're seeing in the bridging of NFTs into DeFi, right? If you think about it, the core aspect of NFTs is about ownership, right? And it really reflects that into DeFi because when you have just like random tokens compared to NFTs, tokens are just one-to-one. So if I exchange with you, it's the same thing. But with NFTs, it's a unique piece or asset of ownership, right? You have a Bored Ape, and that's your only Bored Ape. Your Bored Ape might just be the 8,000, right? So no one else owns that Bored Ape on the Ethereum network. That's verifiable as yours, right? So it bridges certain use cases such as ticketing, use cases like real estate, even digital assets like, let's say, a shoe could be in the metaverse. Like, this is my actual shoe, and this is the same thing within the metaverse. So I guess bridging these things, right? That's going to be the future of DeFi and NFTs, and how we scale that to size within things like the metaverse, how we own things online, how we trade value. So it's really going to be interesting what's going to be to come and what's already on the pipeline.
Cool. That would be my second question. What are the use cases that you foresee? So Ken, I guess you have answered that already. How about Garland? What do you think that use cases might be? Other than losing money, I guess.
Sorry, use cases for what?
For between NFTs and DeFi, merging the two, what do you think will come out of this space?
I think one very good example is NFT perps. So basically, I think that could be new way of generating liquidity for NFTs right now. So we've been very bullish on NFT perps, but other than NFT perps, anything that touches NFT right now, we just kind of we think it's pretty dumb. So we're just riding out for now. Yeah.
So you're talking about unlocking the some of the value in the NFT. Let the perps trade. It's the same as you're a hodler. It doesn't generate value, but now you're putting into liquidity, then it generates value. Yeah, I totally agree with you, man. So how about you?
Yeah. So my idea would be. Because for NFT, right? Like NFT, one of the very nature of it is illiquidity. If token assets represent liquidity, then basically NFT represents an illiquidity. So some of the financial assets, if you think about it, they would actually share pretty much like the same kind of nature as the NFT. For example, if you're talking about like a bond, right? A bond at the the value of it at a different time point, different price, different volume would be different, right? So the representation of it can be an NFT rather than just a token. This token itself is very hard to capture such kind of like a multi-dimensional kind of information inside, right? So I would say like an NFT would be a very good kind of representation of it. Some of the example that we already seen, including say like a Pando, right? They already tried this kind of things. But I would say like probably in the next cycle, more attempts like this would be seen.
Cool. How about Kenny? What do you think this space will look like?
I really like what Ken and Vincent said earlier regarding what they see, with where NFTs are going. I personally like NFTs being tied to tangible assets. Like
asset-backed NFTs.
Yeah, asset-backed NFTs, like luxury watches and bags. But however, the ability to deliver a very good product to use is still some ways to go. No one's really bridged that real connection yet, as far as I've seen. They can make the tech work. However, there is not a lot of businesses using it yet. I really want to see it happen. We've made some investments in that. From the luxury market, the real estate market. However, it's always the traffic, the adoption. You know, that I'm really like, I really want to see. Because some of these guys, they're really good builders. However, you know, it's timing and the market. So we're in the very early days.
And
of
the
course.
UI UX isn't that very polished either. So the user onboarding is, you know, the journey isn't that great. You know, to be very honest with you.
Yeah.
Even like using MetaMask, that's a lot of hurdle for a normie, right?
Yeah, it's tough.
Yeah,
It's tough, right?
All right.
Yeah.
Thank you so
Sorry,
much.
I actually disagree with that because real world assets, I don't think we keep talking about real world assets like, you know, as an NFT and like how that's gonna be combined. I think there's a time and a place for it. There are obviously like tickets, access, you know, certain things can be NFTified. But I think due to regulation and the ability to convert physical assets into a more of fractionalized NFT, I think it's a very hard concept. The regulations are very localized. The human behaviors and the, you know, capital investment is very localized. So I always think that the projects that are trying to do that are maybe a little bit too far off. Maybe 5 and 8 years out. Too early, I think.
Well, it seems like you're describing NFTs are with tickets, but I mentioned luxury items, including real estate. So for example, Garlam, VeChain, they've already developed NFT technology which they can tie to bags. I'm not going to talk about which brands they work with, of course, you know, but the technology is already there. And for them to be able to prove provenance, they're not the only player in the game. There's players already doing it for a number of years, mainly a lot of these Chinese infrastructure projects. You know, they're using tags, you can scan the tag, track the provenance, see if it's real or fake.
Supply chain as well, along the supply chain.
So please, excuse me, I'm not talking about tickets.
Yeah. Well, to be very honest with you, regulations is still up there. Again, even with tokens, we already have that kind of, you know, disagreement between regulations. What's a security? What's a utility?
But I think there's a difference between the tech being ready and adoption being there, right? Like I can't imagine JP Morgan, BlackRock, any of these guys going into a NFT-fied real estate or luxury item. Like why would I put luxury item on NFT? Like
You're wearing an AP watch, right?
Yes.
How can you tell if it's real or fake?
Because I bought it from a retail.
But there's a secondary market.
Yes.
So you go to an auction house, how can you tell?
From
Are you gonna buy it
serial
from them?
number?
See, there's a lot of unknowns. How can we trust the experts? How can we track who actually identified the watch?
I'm not disagreeing with the fact that the NFT does provide provenance. I'm disagreeing with the fact that because the technology is there, doesn't mean that you should just put everything on there. I don't think luxury markets and physical markets are for that. There's a reason why we have retails. There's a reason why there's, you know, all these group collectors and dealers that are, you know, fit for that market, whether that's real estate, whether that's luxury items. I think NFTs do have different purpose, such as access, exclusivity, something on the digital side, PFPs, but I don't think it's, you know, just right time or the place for NFTs to go into and people to build into physicalized NFTs or RWAs into NFTs.
Chill guys. Let's. I think there's a time and place for this extended discussion.
Well, we're just trying to figure it out all together.
Yeah, sure.
You know, whatever
Right.
deals you're making on your own, go do your thing. My target is not JP Morgan.
Right.
We're trying to create transparency on the supply chain.
To be fair,
You know, so whatever mindset you have, good for you.
yeah.
Okay.
To be fair.
All right.
5 years ago, you said that JP Morgan will have a crypto trading desk. People will laugh at you. But what do you see today? Well, again, it takes time. Let's have this discussion over coffee maybe a little bit later.
Can I chime in just fast there?
Okay,
I'm not gonna put my own opinion here, but I actually agree with both of you guys, but for certain parts, right? So I actually agree with Garlam on the part that luxury assets doesn't have a necessary place in crypto. Yeah, but I also agree with you that verification could always be through blockchain. So I'm not sure how that tech will work, but that's one of the best use cases in terms of verification. Is like you will have one system all across the world to verify any asset and its true authenticity. So I'm agreeing with both of you in a sense, I guess, for certain parts.
Cool. Well, let's move on to a little bit more to the community side, right? So on one side, on the NFT side, you're gonna have this 8-picture degens. On the DeFi side, you're gonna have this yield chaser degens. How are you gonna mix these two, man? What do you guys think? There's this 8-picture guys, and then there's like yield chaser guys. What's the APY here? What's the APR chasers, right? Since one is NFT, one is DeFi, what do you guys think?
Okay, I can go first. So first thing is that so if you're talking about that, if everyone's kind of like a profit driven, right? I purchased aping this NFT for profits. Aping this yield farming,
following
for profits. Then basically that's the same thing, right? We share the mindsets in common. That's we here for APR, right? But the thing is, what's not so much in common is that for DeFi people, everything is really number based. You got a very clear kind of like a stats. You got a very clear so the API change. If it's dropping by say the 50% by like in 2 days, I'm out, right? So that's very clear. That's very simple, right? But for NFT, it's kind of different. NFT is really like you created a cult. Or you create it like in a religion, right?
Following.
Sometimes it's not black and white that you can tell from the floor price, right? Like last year, when what was the name of this guy? So the founder of Azuki, right? So he kind of like exposed himself for being the mastermind behind a couple of failed NFT projects. Back then, everyone's like saying, "Oh, Azuki is down," right? But look at what's happening right now.
Right?
Like,
bounce back stronger.
Yeah, exactly. It bounced back hugely, and other projects like Doodle, they kind of like barely moved in terms of the market, the floor price. So that's exactly what I'm saying. Like. Running the NFT, it's more about the consensus, more about how you can create a narrative, how you can create a shared belief or even a cult. While when you talk about DeFi projects, it's purely about the numbers. If you want to make a real yield rather than a short-term like Ponzi's, then you got to really find a very good reason for the bots, not the humans, to really use that. Use your router, use your protocol, right? That's a different level of things. So I think in terms of the difficulties, on one side, DeFi is more about technical part. On the NFT side, it's more about the mental or psychological kind of part. Yeah.
You have something to chime in now, Ken?
What was the question?
The difference between communities, or the similarities between the communities, right? The NFT community and the DeFi community. How do you think they're gonna gel together, right? One's talking about floor price, one's talking about yield. Yeah. So, for example, right?
Yeah, I think, of course, both communities are mainly interested in how they're gonna make money, right? I think that's where you could sort of merge the two, and that if this, because when you're an NFT maxi, you're investing in an NFT for its perhaps utility, and you want value accrual by people having more demand for that, right? So that the same can also go for DeFi tokens, right? You have specific use cases in perpetual exchanges that can scale as volume grows. As more users come on the platform, it becomes more valuable. So, you see eye to eye on those kinds of things in terms of scaling a business. Because with NFTs, the biggest kind of way to scale these is like through IPs, brands that are solid in the space. Like you've seen successful names like Bored Ape, they're huge, and we've been seeing a number of others come into this space from traditional brands, perhaps, from content creators. And this is the same, but in the world of DeFi, it's about how do you provide sustainable yield? How do you make sure that you're giving a product that people can actually use? So, in terms of that, it's at the end of the day, are they sustainable businesses? So that's how like communities can merge together. That's to
Totally agree on that. Kenny, you have two cents.
I don't. I really liked what Ken Basic said. The entrepreneurs, can the teams make the business sustainable? That's the most important. So
At the end, it's still a business. There's cash flow issues. There's funding issues.
Like who essentially is the cash flow? Where's the cash coming from, right?
Where's the yield coming from? Like, if you don't know where the yield is coming from,
what's the business model, right?
Yeah.
Totally agree. So I guess that moves on to my next question. What are the main hurdles? I think we have discussed a little bit on that already. Regulations being one, having a solid business model is another. What are the hurdles? I guess the similarities between these two, and what do you think that we can do about it? I mean, let's talk about regulations first, right? Regulations now. I mean, the US is trying to ban crypto, and to the extension which will affect DeFi and NFT being tokens, that probably will extend that part too. So what do you guys think about regulations? How do we go about it, solve this? Or you guys have some comment about it? Can you? Ken.
Sure. So perhaps the question was more about hurdles, right? Hurdles in scaling NFTs or DeFi, or
merging those two, right? What will be the hurdles be?
I think, of course, regulation is one part of it. Like, if it becomes more regulated, people feel more safe around it, and so adoption scales with it, right? Another part would always be the UI UX. Because let's face it, it's very hard for someone to get in and onboard into DeFi or onboard into having NFTs or digital assets, and so these are some of the things that we're seeing. Another part would be just the onboarding experience in general. For someone to actually buy crypto, it's very hard for them to come into this and learn this. You have to perhaps make crypto feel like Web 2. I think that's how we're going to be scaling this up, is make it very simple for people to use. There's a saying that there's an abbreviation for KISS, keep it simple, stupid, and that's some of the kind of products that you want to be seeing within Web3, so you can really have this mass adoption. So yeah, I think those are the two parts.
Yeah,
regulation,
after 14 years,
experience.
People are still having trouble buying crypto.
Yeah,
after
exactly.
14 years.
Yeah.
Hi, Galen, what do you think about the hurdles now? Awfully quiet today. Vincent, how about you?
Yeah, I think Ken has already given a very good kind of explanation on like how regulation potentially can be a hurdle, and also for the onboarding issue. I think I'll more emphasize on the onboarding part, right? Because regulation is very obvious. Everyone is already. I'm not too sure if is it a price thing already, but it's already a thing over there. I think education is a quite a big problem here. So we have seen that for the crypto or the tokens that we talk about, right? It has already been 14 years, and now people start to kind of having some acceptance here, right? I mean, NFT to me is more like the Trojan for cryptos, right? So basically, NFT is a more acceptable kind of a way for normie people, because it's closer to their daily life, right? NFT can be easily associated with the luxury brands and the cool stuff. Yeah, exactly. But my problem, especially when you guys are talking about if RWA or real world asset or real world and stuff and projectile into the crypto native world is a good thing. I actually think from the other way around. I think the real adoption, the real acceptance is actually when a crypto native NFTs are actually going to project it into the real life. Let's say like an ape, right? BAYC. Now, people wearing BAYC as a T-shirt, right? If that's I'm not it may not be a genuine one, as you said, because we cannot go to this guy, hey, I cannot verify if that's a real shirt or not, right? It's not very possible. But that's basically like an attitude. So when you're wearing this, people are, thinking about something about you, right? Like if you wear Nouns is now like probably worth for like $500,000 or something like that, right? So it's basically an attitude. It could be like a new cool, right? 20 years ago, 30 years ago, right, like when Yappies, or right, like the last wave of rock and roll people, right, like they were kind of like the minorities now, but later they become the cool things. So it's all about how you become the cool, how you become the trend, right? Then you can have the wider acceptance rather than just be digging deeper into the techie shit. Right? That's two different level of things.
Yeah, I know.
Actually, general people do not really care what kind of technology you use. I don't care whether it's NFTs or whatever. If I can make money off it, then yeah, I'm in, man. Right. So Kenny, how about you? I think
I just want to see more serious people come together and build sustainable businesses.
we're all serious people here. Hey, we're all serious people here.
For sure. That's what I want to see. That's what I appreciate, Like I know a lot of folks want to make quick money, but gotta think long term, like don't want to burn bridges along the way, just build something more meaningful for the world, right? That's what I would like to see.
Cool. So time's really up, but let's do for one more question.
Yeah.
Talking about the future of this space. Between NFTs and DeFi, coming along in 2 years' time, 3 years' time, that's the future for crypto anyway. That's 30 years for crypto. What do you guys think? What do you want to see in 2 to 3 years' time that has NFTs and DeFi?
So of course I want to start with the products that we're going to be seeing. I think there's going to be a lot more use cases. It may sound crazy, but it may work. Ticketing is actually a great one. We didn't think that would actually work until we actually dived into how it could work, right? So as it grows, we're going to see different kinds of experimentation and use cases and utility and how people can use it within their daily lives. I think that's going to be a game changer in how NFTs will be developing, as well as DeFi, that we can essentially just interact with on a day-to-day basis. And another part would be, infrastructure, which is, going to be an amazing play here in terms of how we transact and trade value every day. Think of it like Ethereum is crazy fucking expensive these days, right? And even if you have these layer 2s, they're still very clunky and still very slow. So as it continues to grow, scalability comes along with it. And, it's going to be a part of our daily lives. Yeah.
Alan?
Yeah, so 2 years, 3 years. So all jokes aside, I think I got into crypto because I saw it as a global, unregulated liquidity. And at the end of the day, it is a liquidity game. Compared to traditional markets, what it is everyone playing in a stock market and everyone trying to up each other, whether through a narrative, whether through a product update, whatever that is, right? And NFT is no different. NFT is a liquidity with pictures and community, right? So I think the way we should design this field is we definitely need more variations in terms of revenue angles and other forms of revenue other than just trying to make ETH and liquidity go up. I think it's very unsustainable to be just doing that. If you imagine like Tesla, Amazon, all of these guys, like they don't sell anything. It's just like they play on the stock market and liquidity is all their game. It's not sustainable, right? Like you need to have a fundamental piece that's supporting all the liquidity. It should not be the other way around. And we have been like that for the last 7-8 years, right? So for this industry to be successful, less scammy, to be less volatile so that we can actually build hedging protocols, option protocols, risk mitigation protocols, stable yields. We're not circle jerking each other on the yields, right? So like in order to build all of that, I think NFTs and DeFi need to have more fundamental forms of revenue where it's utilized. Like we love to talk about utility, but no one actually does utility, right? Like it needs to be utilized in day-to-day lives, like cars, like furnitures, like electricity.
Yeah, focus on some
Yeah,
physical
so,
part of the
In order
business
for it to do
rather
that,
than
I think
NFT itself.
that needs to happen, and we want to fund projects and founders that are thinking the same way, not as a liquidity game, but as something more that they can add fundamentally to not just the NFT and DeFi space, but blockchain in as a whole, right? So I think that's what we're kind of looking for when we're looking for investments.
Cool. Vincent, any last thoughts?
Yeah, I totally agree. So I think in the next 2 years, one thing is for sure going to be improved, which is going to be the liquidity management and infrastructure for NFTs, right? Because in the first place, we thought, NFT is probably going to be the artifact, kind of like a replacement, right? But later we realized that actually NFT is more like goods and services, while tokens are being more like the monies, right? Then after that, we kind of like start comparing the real world commodity, what's later happened to the commodity world. Then we realized it was actually about a letter of credits or these kind of things. These are basically about the credit lines, right? These are all about the liquidities, right? So this one thing for sure, and we're already seeing a lot of teams are working vigorously on this, on NFTFi and liquidity management and the liquidity improvement kind of infrastructure for NFT. So I'll be very bullish on this part, right?
Cool, Kenny?
I think in the next few years we're going to see more and more multi-stacks of technologies integrating with the blockchain layer. The blockchain is just a fundamental layer, right? So we'll see some IoT products, like NFC chips, for example. Applications, AR, sharing of information. I think that's there's some solutions out there today, but we're going to see more and more advancements, in this industry, and DeFi certainly is going to be related to that.
All right, cool. I think that even the cars are saying time's up. So, well, thank you everyone for joining this panel. I learned a lot today. I hope you guys learned a lot. Please feel free to talk to these guys when downstage. Where this is last session.